One of the biggest, shiniest carrots dangled in front of potential Bitcoin investors is the prospect of high returns. And yes, it's true, some people have made an astonishing amount of money. We're talking about early adopters who bought Bitcoin when it was worth pennies, or even just a few dollars, and then watched its value rocket upwards. For instance, if you had bought just $100 worth of Bitcoin in 2010, by its peak in 2021, that modest investment would have been worth millions. That's not just a good return, that's the kind of return that makes traditional stock market investors weep into their sensible, diversified portfolios. This potential for exponential growth is a huge magnet. Then there's the accessibility and its decentralized nature. Unlike trying to buy shares in a private company, or investing in complex financial instruments that require a broker and a lot of paperwork, Bitcoin is relatively easy to get your hands on. If you have an internet connection and a smartphone or computer, you can set up a digital wallet and buy Bitcoin, often with just a few clicks. Furthermore, it's decentralized. This means no single bank, government, or institution controls it. The network is run by thousands of computers worldwide, making it resistant to censorship or shutdown by any one entity, a feature particularly appealing in countries with unstable governments or strict financial controls. This decentralization isn't just a technical feature. It's a core part of Bitcoin's philosophy. It offers a degree of financial autonomy that traditional systems don't. You are, in essence, your own bank. You control your keys, you control your Bitcoin. This appeals to people who are wary of traditional financial institutions, perhaps after witnessing banking crises or worrying about inflation devaluing their savings. The idea that you can send and receive value across borders without intermediaries, often with lower fees and faster transaction times than traditional bank transfers, is also a significant draw for many users and investors around the globe. Moreover, Bitcoin is often touted as digital gold. Like physical gold, there's a limited supply. Only 21 million Bitcoin will ever be created. This scarcity is designed to make it a good store of value, protecting against inflation, which is what happens when governments print too much money and the cash in your wallet buys less and less. In times of economic uncertainty, some investors turn to Bitcoin as a potential hedge, hoping it will hold its value, or even increase when other assets are falling. This narrative, comparing it to a scarce precious metal, adds another layer to its appeal as a long-term investment for some.